consensus view generally is that the MPC will decide to keep rates unchanged. What's your view?
Yeah, I think we agree for two reasons. First of all, if you look at the historical data, the central bank has never hiked interest rates after an election since 1999. Well, it cut rates in 2007, but it's never actually increased rates. And I think it's because the central bank usually wants to monitor the policy steps of the new administration. So that's probably going to be the same case this time. And the other reason is that the central bank front-loaded the interest rate increase in March by hiking the MPR by 100 basis points because of the elevated spending due to the elections, because of higher energy prices, and possibly because that fuel subsidies would be lifted at some point in 2011.
All right, Samir, we know that the basic mandate of any central bank is to rein in inflation and keep it in check. Now, we've seen a mixed picture, as it were, for inflation in Nigeria. 11.3%, whereas March was somewhere in the region of 12.8%, and the month before that, 11.1%. So it's declining, but there is a threat that it could rise again for some of the reasons that you've pointed out. What is it about Nigerian inflation that the MPC is going to need to be aware of going forward?
Well, I think they're going to have to look at the outlook for inflation, not so much the past data. And surprisingly, actually, the outlook is quite positive. You know, the 12.8% that we saw in March is a bit higher than what the data issued, the breakdown of the sectoral data issued by the NBS actually indicates. So inflation in March was probably closer to 11.5, and the time series might have to be revised. So the implication now is that inflation could actually be between 11 and 12% in the third quarter, or even fall to 10% in October and November, and then to 9.7, 9.5% in December. So it's quite positive. But the downside risk, obviously, is that fuel subsidies could be lifted at some stage, maybe this year or next year.
All right. Obviously, another consideration for the central bank and the MPC is the naira. And when they decided to raise the benchmark rates by 1 percentage point, that was really the thorny issue for Nigeria. We've seen the naira breach 157 naira to the dollar in the last week. Post-elections, there's still a bit more dollar demand than what was expected. Your outlook for the naira, and what is it that the central bank can afford to do?
Well, the expectation was that after the elections, the kind of sell-off that we had seen over the last few months would stop. Actually, it's not happened. And it's probably because the market is watching at two parameters. One, foreign reserves, which are still flat despite the fact that the oil price has surged in annual terms despite the correction in recent weeks. And also because key structural reforms have been delayed. So I think once the sovereign wealth fund bill is passed and actually implemented, and some other reforms are starting to take place, maybe confidence is going to shift, and there will be some rally in the forex market. I think the central bank is actually keen to keep the exchange rate at plus minus 150, because they know that if they let the currency go, then there's going to be a spike in imported inflation, given that food inflation accounts for half of the CPI basket.
You mentioned it earlier on, and the governor of the Central Bank of Nigeria continues to reiterate this point. Fiscal spending is a major influence of inflation in Nigeria, and very concerned about unbridled fiscal spending. You know, are there any indications of fiscal tightening? And I'll just refer here to the fact that recently a revised budget that went to Parliament was rejected in many ways because the feeling was, you know, the senators and the parliamentarians weren't accepting the idea of a reduced budget in Nigeria.
Well, that's a concern. I mean, as of last week, the finance ministry had indicated that actually a new budget could be issued by Friday. It did not happen, so we still expect that it might happen this week. I mean, clearly the 4.97 trillion naira spending planned by the National Assembly is just not sustainable, and it has to be cut. The other point, however, is that, as I said earlier, the sovereign wealth fund bill has been passed, and now it has to be signed by the president. I think that's a very important point in terms of fiscal consolidation, because until now, One issue had been that the oil price went up, but the excess crude account was completely depleted, and the oil fiscal rule was not implemented. I mean, it's not been implemented since 2010.
Let's talk about policy going forward. The IMF has suggested that there is a need for monetary policy tightening in Nigeria. Authorities generally rejected that idea. What's your views on what's needed by way of further rate hikes by the central bank and possibly an adoption of an inflation targeting program?
Well, the problem is that if you hike rates to contain pressures on the exchange rate, you have to increase rates drastically by maybe 200 or 300 basis points. Quite frankly, I don't think that it's something that you can do at once, and I'm not even sure that it's advisable. On the inflation targeting side, the problem is that inflation is extremely exogenous in Nigeria. Food accounts for 50.7% of the basket, utilities for 16%. So the central bank cannot control at least 2/3 of the CPI basket. In such a context, I mean, unless you have a currency that appreciates, I just don't see how, in practical terms, you could implement inflation targeting in coming years. And I was just going to add another point. One reason why the exchange rate has been under pressure, despite the fact that interest rates went up, is that there is a restriction on foreign inflows in the fixed income market. Currently, you need to keep your proceeds in naira for a year in the country until you're allowed to repatriate them. And obviously, that's a big constraint on foreign inflows, because in the post-Lehman world, foreign investors want to have liquid positions that they can exit at any time. So if the central bank actually were to lift this restriction, I think that the situation could improve in the forex market.
All right, and a final question to you, Samir. You've made extensive reference to the Sovereign Wealth Fund bill, and that it will provide some kind of legal basis in terms of how to manage windfall oil revenues and savings. How is this going to help Nigeria, with regards to the fact that also you've got reserves flat, and the CBN has had to tap into the reserves as a war chest in trying to stabilize the naira? How do the two instruments work in support of each other, the reserve position and the Sovereign Wealth Fund?
Well, as of now, the reserves actually include the CBN reserves as well as the excess crude account reserves. Now, if you have a sovereign wealth fund that is codified, then you're sure that actually the proceeds in excess of the benchmark oil price are saved, which frankly we're not sure about right now. So with the SWF, reserves should go up. Now, when we talk about CBN reserves, the problem is that you have high demand at the WDAS window, and that high demand is likely to disappear when confidence actually improves in the market. And that confidence will only improve when key structural reforms are implemented, including the SWF bill.